Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go. Hi everyone. Today is Tuesday, September the 9th. We've got some grinding upward motion here. Very interesting. Let's take a look at the SPY first. This reminds me of the broad market action. We can see where the strikes are located. We've got the 625 puts. That's pretty interesting. We just got a piece of news, obviously. Something just came in that is pushing the market in one direction or another. The puts and calls are getting worked out just a bit, and we're seeing what goes on in general. Okay, yesterday, our 30-minute, the last 30 minutes of the trading day, again, the thought process is that when we see that last 30-minute event, it is the institutional traders flattening out on the day, right? So they went short up here near the call wall, and they began to cover at that 3 o'clock event, and now here we are back up in this zone. Now, here's the thing. Today, we don't really have a ton of information, but tomorrow and the next day we do. And so my thought is we've got a redux of this, and we are still sitting inside of the employment situation numbers. So what's the trade? Opening formations, we can tell that we're cluttered, but if you want to be an aggressive buyer, and that's going to be relative to your personal bias, right? We've got the 30-minute opening candlestick, the 30-minute closing candlestick, the pullback into the zone, $648.90, is the buy event, and I would suspect that the stop for SPY would be somewhere around where the VWAP closed yesterday, and that is $648.63. Okay? I do not expect a news event that's going to shove us out of this range, but remember, we are climbing this wall just like we did at Jackson Hole to the top of the range and then moving downward. Trend still upward, momentum flat, right? I don't love the momentum here, but it is relatively bullish, right? If we use this multi-length oscillator, we can see that it is still relatively bullish. Okay? Traders, look for the wicks up top. That's going to help you decide whether sellers are actually sitting up here and can force price back into the pocket until the piece of news, and then watch the chains using your unusual options here with SPY so that you can see what the traders are doing in general. All right, I know I went backwards there, but let's take a look at the E-mini S&P. All right, what did we do yesterday? Same sort of thing. Two highest candlesticks of the prior day. Here's our opening 30-minute formation. Man, I hate that locks like that. Right? You can see we're dipping down into that space. Looks like about the 50% range. Also, it came into the space where the traders ended and closed the VWAP of the prior day. That's what this dotted line is. It's the closing VWAP of the prior day. Now, here is same thing, last 30 minutes of the day. You can see that the traders are doing the same thing that we expect from price action when we see most of the intraday traders flattening out, right? And you're seeing this opening range, closing range. Now, today, our 4 a.m. candlestick, where is that one? 3-4, 330, which is the one that really makes this one here is a volume pocket that's very interesting. So I'm going to mark this line out, and this is probably going to be our do or die space, right? If we breach 6,517, we've got ourselves more bullish action into the call wall. Remember, that call wall has moved up. It was down here yesterday. They're pressing it out, rolling the contracts into the next space. So we've got that region there. Our 4 a.m. candlestick that we know that Tom Hugard looks at simply because he trades in the European market. Oh, for the love of Pete. All right, Fred, get yourself together. Right? Gives us this low edge of 6,510. Now, notice how porous the region around 6,503, maybe, to 6,509 is. What do I mean by porous? We're breaking through these edges and then recovering. Breakthrough, recover. Breakthrough, recover. Breakthrough, recover. That means that that floor is not secure. So, where might we go? To the bottom of the range, also high volume formation. This is a sticky patch. Remember, same sort of trading as yesterday. Very sticky formations. So we're going to look at high, low, higher, higher low, but with declining momentum. So that means wherever you go to, it's going to fade. It is going to fade. Now, you can take the trade up, but you've got to get out. Not likely to be a trending day unless we see some kind of savage motion. I would like to see the fades back down to these very familiar levels, 64.97 to 65.03, where the point of control currently sits. The put formation is not, it is very far away, right? I can't even see it on the charts. They might try to roll it up to get some premium because they are continuing to have to roll this call resistance line to the north. Okay? So, what are you doing right here? Should be a little bit of nothing because you're bounded above and below. Wait to enter where all the traders are saying, you know what, I'm getting in. And if that's 6,505, then, your stop is going to have to be at least 5 points wide, because point of control is very likely to where they'll slip into, but we have got lots of overlapping candlesticks in terms of where the volume sits, and we've got to pay attention to that. Remember, this 9:30 candle from days past is the next box that everybody gets to play in if the sellers can move out of the way and the buyers can take control. Trend up, momentum flat, bounces are going to sell into support zones, at which point you'll find yourself a pretty nice setup if you just focus on support structures, overnight lows, point of control, and just wait, right? If you are trading a combine, remember, this is a training program. A combine is a training program. It's not like a real combine where you're telling somebody, hey, let me show you what I got, because most of us don't get much when we get into the space. Remember, the guys who get invited to the combine are showing already that they've got something that they could offer. We get to come into a combine for nothing, right? $49. What does that buy? Not much of anything these days, the way money is. So just remember that. Focus on getting the process right, okay? It's not about anything else but building process and putting yourself in the training space, right? This is more of a training camp than anything else. Okay, so here we go. Taking a look at the NQ. Same sort of structure. Let's take a look. Notice positioning here, very interesting. Last 30 minutes of the day does not show the liquidation that the ES is showing, not by a long shot. And so the low here, 23,770, to the high of 23,812 is the region that price action is trying to hold the floor on. Now remember, what do you do when you've got an opening range candlestick that opens inside and then closes outside? You take your Fibonacci, you draw a 50% event, and you put your buy right here at 23,790. If you want to take 1 micro so that you understand structure and you're able to withstand this 25-point loss, if it fades into support, and then you're off to the races. Where are you going? If you draw the Fibonacci, I like to walk up that Fibonacci. And so I'm going to go into the 1.5 or 2, right? Now, volume tells us that where we're really going, hey, this is important. It tells us it's going to play in the great big box of the day. And so if you're staring down, okay, I know my entry is going to be there. Where's my target? Look for the next big box. Draw your Fibonacci. First line in the sand is going to be the 50% range of that candlestick formation. Easy breezy, lemon squeezy. The second target is going to be the top of the box, and then you're gone. Okay? If you're trailing it up and you're up all night, good on you. But that's how you set up these structures. Now, as far as the rest of the day goes, where are we? We're caught inside range and inside value. What does that mean? Wait for better setups. And that means coming into 23,800 or 23,771, or you're looking for either a short up here, because we do have negative divergence. You can use a short up here, very tight stop, and if it breaks out over value area high, 23,890, you can take it long, maybe they'll get to 24,000. The Gemini news, if you didn't see it, look it up. That is going to blow our Google Iron Condor out of the water. So I'm looking at triage for those of us that trade options together on Benzinga. We got to look at that, and I'll be working on that today. Okay, so literally, that's all I'm going to go over. Sorry, not doing oil, not doing gold, not doing the YM. Just want to get this out, get it set up, and make sure you guys focus. Focus on the process, right? Focus on the process, and you're going to get the results you want. All right? Take care, everybody. I'll see you on the streams.